right, so welcome to Game Plan Sunday. Today is November 7, 2021. Here with the crew. Pretty interesting week overall. We had the Fed's meeting. We had, the infrastructure bill that got passed. And we had some other situations that we'll dive into here. But we'd like to start off with the review of the market here, what occurred over the past week. All right. So taking a look at the indices and the sectors, we started out with the Russell coming in pretty hot, 6.09%, pretty hot with the Russell there. And we talked about this for a while. The rut was squeezing. And I was telling you guys for like the past month, like, hey, it's got to make a decision soon because it's squeezing, it's compressing, it's near a decision. And it was like week. And then next, we got the a little play. We'll go over it, but 6.09% leading the way for the indices. The Nasdaq was up 3.05%. That's a no-brainer. Nasdaq tech stocks, they normally do what they do. The S&P 500 was up 2%, which that was pretty good. And surprisingly, here at the end of the week, gold finally made a nice little breakout at 1.96%. Gold has really been testing a lot of patience. We'll see what the future of gold holds here for us here in the charts when we get into it. The Dow Jones is up 1.42%. And I was talking about that the prior week from last Game Plan Sunday, that, my anticipation was for there to be a move in the Dow. There was a weekly squeeze on that as well, trying to see that take place. And we got some nice trades off of there as well this past week. Also, the dollar was up 0.09%. So the dollar was up, pretty slightly. I definitely want to keep my eyes on this development in the dollar here. I think we definitely got to keep our eyes on that play out here in regards to equities and everything else. Oil was the loser and Bitcoin was the loser of last week. So oil is start to, come back a little bit. It still haven't, clipped its wings yet. And the same for Bitcoin. So just a nice little pullback here. I'm sure the buyers in both of these are pretty much appreciating those little pullbacks, and they probably see them as further buying opportunities. We'll see. All right. So John, you said you got the wifey watching. Salute on that, Playboy. Appreciate that. Tell wifey said what's up and welcome. All right. Now moving on to the sectors here, we had consumer discretionaries at 5.03% leading the way. Everybody's shopping, got to get your shopping popping off. And then we had technology stocks up 3.44%. The materials sector was up 3.17%. Consumer staples was up 2.46%. The industrials was up 1.82%. Communication stocks was up 1.74%. Energy stocks was up 1.37%. And real estate was up slightly, 0.84%. Utilities was up 0.46%. The losers were financials and healthcare stocks were down. All right. So that was the play out of what occurred last week. All right. And so on top of that, starting the week off, we did get the readout from the Feds. So for you guys that's on the website, we dropped the videos and everything so you guys can check it out live. You don't have to depend on my commentary here for yourself. Anyways, right here on the website, this is the meeting here. And basically what we learned is that the Fed said they were going to scale back, the $120 billion that they've been putting into the market. So they're going to scale back in the mortgage-backed securities and the treasury securities. And this program is supposed to start like the end of this month. And they anticipate on being finished by June of next year. And so the Feds, this is like two different ways that they kind of try to deal with, this inflation situation. Traditionally, what they would do is raise the interest rates, and they don't want to raise interest rates, not at all. It'll be detrimental on this so-called recovery. And so they don't want to do that. So what they're doing instead is removing their presence because they've been supplying the market with all this liquidity. So now we got too much liquidity, they got to pull back. And so that's what all of that was about. Listening to the interview, I didn't listen to the whole thing, and I got to most of it. Powell, it's the same story over and over again. They still have this belief that inflation is transitory. we called it way back in the beginning of this year that inflation was going to be problematic. And here we are, 11 months into the year's almost over, and we can clearly see that inflation is problematic. The problem is that it's not finished, okay? It's still going to continue. It's going to get worse. And even Jerome Powell and Yellen and all these bureaucrats are saying themselves that they're saying, oh, it's going to last until 2022. So remember, that's going to be the next narrative, is that it's going to go into 2022, then it's going to be over. That's kind of like the next, but they got to always move the goalposts. It was like, oh, first it's no inflation, and then, oh, it's just temporary. Then it's transitory. Then it's, long-term transitory, whatever the terms they want to call it. They just, keep changing it. But it's still problematic. And then we were talking about, before this happened, right? Before this week came up, last week, I was talking to you guys about like Bill Ackman, the Wall Street golden boy. I just think it's interesting. I want to know, y'all tell me, how much money you think you got to have to be able to sit down and have a meeting with the feds? Because, the Wall Street golden boy, he had a meeting with the Fed before this whole meeting took place. And he was telling them that they got to taper, right? I mean, everybody on Wall Street is letting them know, y'all got to taper. This is getting crazy. But I just find it interesting that he could sit down with them and pretty much coach them on why they need to taper, right? And I just think that's interesting because he's always, making money when stuff pop off. When everything popped off, he made a couple billion. So, Wall Street knows, man. Just always keep in mind, follow the rich white man with all the money. That's what Chris Tucker said in Rush Hour. So, and you see, he was on TV crying and all that. I was like, yo, why is he over here crying? He's talking about, he got his analysts running the numbers on the pandemic and all of that. And he was scared, and yet he done skated off with a Billy. You know what I'm saying? So here you go again, letting us know that he met with the Fed. He done told them that, y'all got to taper. And then next you know, we see, oh, they're starting to try to pull back. So they're trying to do it slow and easy, pull back a couple billions, because it's like 120 billion a month that they've been buying. So I think it's 15 billion. They're going to start, tapering down 15 billion a month or so. But that, is coming out of the market. What was surprising is that the market rose up, which is crazy. So we saw the stocks was like rallying up on this. And again, this is midweek, when this occurs. And, that caught me by surprise. I was out on the road anyway. But you guys was on the website in the chat room. I know Jonathan, Chris, Terry, and you guys. I think I jumped in because I was on the road. I'm like, yo, what's going on? I got to check in with the crew. You feel me? Like, that's what I love about the website and technology. I'm still plugged in. You feel me? So anyway, but that's good, and I appreciate y'all for keeping everything posted. You know what I'm saying? Like keeping it going. And so that was pretty much it for the. For what the feds are doing. We see the movement in the bonds and stuff like that are starting to move, and pay attention to this stuff here. So we'll see how that plays out. But basically, that's what the story is right now. They're still continuing with the transitory narrative for the time being. But, Powell, he tries to assure the markets that, if we get out of hand, we'll have the tools to be able to deal with it at the time. But inflation is one of those genies that once it gets out of the bottle, you can't control it. You can't put it back in. And so they're really playing with fire. So that's why you have all of these economists. They're really having heated debates about this, and all the guys on Wall Street too. They already know. So they know they got to do something, but at the same time, they rather cook the economy. Anyhow, we had the weekly jobless claims posted by Terry here, 269,000 versus 275,000 estimate. I mean, really, the jobs data isn't really moving the market as much, so I really don't put much weight on it right now. What we know is that productivity is still super low. We see, lots of craziness happening with this Biden administration that is preventing, capitalism from doing what it needs to do, productivity from being where it needs to be. All of this has a total impact on our quality of living. You know what I'm saying? So when you talk about these whole mandates and all of this craziness, it's ridiculous. You already got a shortage of workers. Why would you put some mandate in there that's going to make things worse? And you got supply chain issues on top of it, where you need to have as many workers as you possibly can. So he's actually doing some real backward stuff, which is interesting because I think we saw here that the mandates got postponed. Let me see here. This just happened over the weekend, right? There we go. Federal appeals court temporarily blocks new vaccine rules for private employers. A federal appeals court on Saturday temporarily blocked the Biden admin new rules that require many employers to ensure that the workers are vaccinated or tested weekly for the Rona. Okay. So it looks like they happen to temporarily ban this thing, which, you know, is good for the economy, you know, because again, you need people to get back to work. And some people just ain't going for it. You feel me? Some people will go for it. Some people won't. Understand what's at stake. It's not so much about the medical stuff. It's really about liberty. It's all about freedom. And when you start talking to people about freedom, man, they act like you're talking a whole different language. And it's like, I actually understand what Harriet Tubman was going through when she was trying to free the slaves. She was like, come on, let's go. They're like, nah, the master, he take real good care of us. Nah, I ain't leaving. I'm gonna stay. You know, I go out there, I might die, you know, and all this other stuff. Like, I need the master to take care of me and stuff. And Harriet's like, oh, hell no, y'all tripping. That's kind of how I am. And that's how we, you know, this is the world that we living in right now, which is terrible because living in the free, you know, the land of the free, which is no longer being free right now, is just ridiculous because of whatever Biden he's doing is the Democrats are really messing up. Like I'm telling you right now, people will not forgive Joe Biden for these mandates. Some people are just like, oh, this is cool, I'll just take it. But you got to understand, it's like when I tell you guys all the time about the bully, right? And if you got kids, you got to make sure you teach them about how to deal with bullies, okay? Because the same behavior is the same anywhere you go. You got to nip it in the bud. You go to school with your little lunchbox. The bully, he wants your little apple juice. It starts with the apple juice. Oh yeah, you can have my apple juice. That's fine. Next day, he wants your sandwich. Then the next day, he wants the sandwich, the apple juice, and the apple. He wants everything. He gonna come for the whole thing unless you stand up and tell him no, right? And so even if you fight him and he whoop your ass, he at least know that you're gonna fight back. You feel me? So you got to fight back. When you just give in, he started wanting to take. It started a little bit, you know. It's always the smallest stuff, and then it just get bigger and bigger. So that's what we're actually dealing with all of this. Is really all about, you know, liberty. Okay. I posted this little quote in here from Mises here. It says, those ignorant people who operate on the stock and commodity exchanges, according to tips, are destined to lose their money from whatever source they may have got their inspiration and inside information. This is an interesting chapter in this book. He was talking about like statistics and the economists and how, you know, they do all kinds of craziness with numbers and people believe it, but the numbers don't really mean nothing. And, you know, when you're listening to, you know, I don't know who these guys, Kramer and whoever these guys are, Steve Wiseman and all these guys on these, you know, these shows, you know, their guess is as good as yours. So stop doubting yourself. I just wanted to put that out because I want you guys to stop doubting yourself. You know, one of the key things is with new traders, the biggest obstacle that I know, and even for myself when I started, is confidence. The biggest issue that most of y'all have is confidence, right? A lot of you already have the training that you need to go out there and execute the trades that you need to. But the fear of losing sometimes, you know, paralyzes you from doing so. And you feel like you need to follow some, you know, guru or someone with the magical answers. And they get their heads cracked just like you and I get my head cracked. Like everybody get their heads cracked. That's part of the market. If you're not willing to get your head cracked, then you don't need to be playing. That's like you said, I want to be a boxer, but I don't want nobody to snuff me. Like, you're going to get snuffed, you feel me? Like, it don't matter how great you are. You saw what happened with Deontay Wilder and all that, you know what I'm saying? Like, and Tyson Fury, like even the best, you know, got to get them hands, got to get touched up, you feel me? But it's all about like how you bounce back. So just keep that in mind, is that, you know, these guys, listen, everybody's operating off the same information, except for the insiders, right? They got the inside information. So, but as far as, you know, the gurus and stuff like that, it's good that you could pick up tips and stuff like that, but never become dependent on other people's trades. That's why I don't even like to post trades. You know, I like, listen, this is what I'm looking at, because people start to get dependent. I want to challenge you to go look for the trades, and you present the trades to me. Show me some good trades that I can get in and I can make some money off of. Like, you know what I'm saying? Like it does, like the teacher doesn't know all the answers. You know what I'm saying? So the teachers get his heads cracked too. This is the market. The financial markets is based off of human action. Understand? That's why I keep this book here. And I know a lot of you guys really don't want to get into the economics of things, but this is Mises' work, human action. This is the micro. This is what moves the macro. This is the basis, the DNA of all things. And so people are not just numbers, you know, people are sometimes rational and sometimes irrational. The markets, they reflect that. Sometimes the markets are rational, sometimes the markets are irrational, and you're trying to make sense out of it. And sometimes it just doesn't go that way. So that's why sometimes you have some good ideas, some good, analysis, and it just doesn't go your way. Because we're dealing with human action, but that's the risk that we got to take. You feel me? So anyway, I just want to just let you guys know, those expert guys, their guess is as good as yours. So stop doubting yourself. Get in the game. Get in the chat room right here on the website. Get in there. Get in with the crew. And we in here every day. You feel me? Even if I'm not there, other people are in there. Man, post your trades. You feel me? Like, get in there. All right. Anyhow, so then we got the jobs report, which Terry posted. Hey, job creation roars back in October as payrolls rise by 531,000. The expectation was 450,000, and the print came out much bigger. And the interesting thing is that they end up revising the previous 2 months also up. And so the markets was actually rallying on that information as well. But the reality of it is that although it's a good print, is that the job creation is still less than half of the average. It's actually less than the average of this year, actually. So the numbers are actually really low still. So even though this is a good print, overall, we don't have enough jobs back. We still have millions of people that are not working right now. Hence the mandates. This is ridiculousness that's going on here when we really need as many people as productive as possible in the society, because it's a net benefit to all of us when you have productivity. And it's interesting because I'm gonna go ahead and say it now, is because what people don't understand about productivity, you got to think about, when y'all think about these things, think about like a tribal civilization. Think about, you got your own tribe, okay? Think about the economy in the same way, okay? You got to survive. You got to eat. You got to, drink. You got to be able to use the toilet and stuff like that. You got to, all this irrigations and stuff like that. But you got to have productive people. So you got a tribe of people and half of them are not productive. But you got half that's productive, making and farming and killing the animals to feed all the rest of it. It's going to be a burden on them because you don't have enough productivity to take care of your population. So eventually people will start dying off. So you have to try to get people, incentivize them in some kind of way so they can be productive. We're in a society right now where productivity is just not where it needs to be. So on one hand, you have Biden, he definitely want to brag about the numbers. I'm not mad at him about that. But the numbers, keep in mind, the numbers get revised every month. The numbers, again, don't make nothing real. I keep on telling y'all this, right? They do so much stuff with statistics to me. You can just throw the stuff out the door, man. But yeah, they keep revising these numbers every freaking month. So it really doesn't matter. But what's important is productivity, because of productivity, which you get productivity from capitalism. You understand? The market economy is a productivity state. Socialism is a consumption state. If you got everybody consuming, nobody's producing, you're going to die off. That's why socialism can never be realized. They want to try to mix and match. They want to be able to we got to have some productivity. We got to have some kind of free markets, but then they want to mix it with some socialism. So that's what the governments want to do. They want to try to get a little nice mixture because they know that they got to have capitalism at play. So, but I find it interesting because here we go. With the U.S. labor productivity fell at a seasonally adjusted annual rate of 5% in the third quarter from the prior quarter. So we had a fall of 5% for productivity. That lets you know people are just not productive, not working, okay? And keep in mind, that's why I tell you, we're privileged that we're in a position that we can trade and speculate, but that's not productivity. It serves a function in the market, but you can't have everybody speculating. You can't have everybody trading cryptocurrency, playing video games, trying to win NFTs and all that, because it doesn't add any net positive value to society, So society will end up falling and devolving, okay? You can't have it. You got to have productivity. Things got to keep on being innovative, keep moving, being productive. Well, that's interesting because it said that this here was the biggest drop since 1981 in productivity. So when productivity go down, that means your quality of your living standards will go down as well. And that's not good on society as well. So on one end, they can cook the numbers on employment numbers, but productivity is telling you the truth. Okay. So all these jobs, but you still get productivity that's dropping. It's the lowest since 1981. This is not a net benefit to society. This is one of those reasons why you see like China they actually are banning their kids from playing video games. They got to ban. I think they have like a 3-hour time period, 3 hours a week that they can actually play video games. See, China, they already know. They study well. They read. They know their history. Americans, we are dummies. We got to change that narrative. We got to start reading because there's a long history on all these things. The reason you don't know these things is you don't know your history. Okay. But when you learn about your history, you start to put these things together. You understand China, they already know how this stuff plays out. That's why they're actually moving in the way they do, because they want their population to continue to be productive. Also, they do have a very huge population. I don't know if I even had this up here, but you know, China right here, let me see. Okay, there we go. Panic buying in China. But is there a food security concern for 1.4 billion people? So this article right here, it's on the website. You guys can check it out. But it was China is actually warning their people about food shortages, which is interesting. They're telling their people to go ahead and stock up. All right, it's interesting. Do you hear anybody in America telling you to go stock up? No. But where does all your shit come from? China. You feel me? Like everything in your house come from China. Maybe not some of your foods, but still most of the productivity, the production, because what we do is import production. All right. We import it. All right. That's what we do, because we got the privilege right now. We're royalty right now. Everybody's going to make what we need in America, but that's China. And they're telling you, you know, about, you know, they're warning their people about food concerns. They had food shortages for whatever the reason may be. Food shortages. So there are people stocking up, racking up on everything. What do you think you should be doing as an American with supply chain shortage? Y'all are not, you know, you're not idiots to this. We've been going over this for a while, but it's interesting when you got China, who has 1.4 billion people, okay, that's talking about this. They got to feed 1.4 billion. Understand, America is only like 300 million people, like 330 million people in America. We're like a fraction of the population. You feel me? And so even in terms of like, they have so many people, when they have issues of shortages and stuff like that. Yeah, I mean, if you ask me, I don't think I don't think they quite mind a couple people dying off. You feel me? That's motive in itself for a pandemic, if you ask me. Like, they never have any issues about that stuff. They got too many people anyway. You feel me? Like, they don't have enough people to feed. So, you know, I mean, they got too many people to feed. They don't have enough, you know, goods and stuff like that. You know what I'm saying? Like, you got to get rid of some of them people. You feel me? And it's funny because years ago I saw Jack Ma debating Elon Musk. Jack Ma and Elon Musk debating about, was population going to rise or population is going to decrease? That's, you know, y'all can check that out on your own time. But it's an interesting little debate that they had there, where, you know, like I say, that's motive. You feel me? Do they have a motive to put out a virus out there, knock a couple of people off? You know what I'm saying? A couple millions of people. I don't think they quite mind. They always cooking up stuff. Like, why would you even be making a virus that don't even exist in humans to get into humans in the first damn place? This shouldn't even be allowable. You feel me? It's just ridiculous. But anyway, America paid for it. All right. On top of that, Terry got this crazy posting here: infrastructure bill, bears, and then Elon Twitter poll, which is interesting because I didn't see the Twitter poll, but I think I saw Terry's posting here. Elon made a post about, here you go. He says Elon Musk says he's using a Twitter poll to determine the future of 10% of his Tesla shares, right? And so you guys got to, if you've been studying Elon Musk for a while, this guy's a character, but he's smart. You know what I'm saying? He's smart. He knows stuff that we don't know. He got the keys to transportation. He be beefing with space people and stuff because he be getting the contract. They compete for the contracts from the government. Understand, all that stuff ain't from private capital. It's taxpayer dollars that's paying for it. They're just competing for the contracts. So you got Jeff Bezos and them trying to sue Elon Musk. I think Jeff Bezos lost the lawsuit last week because, you know, he trying to do space. He got my man some Star Trek all out there. They in space for every bit of 2 seconds, right? Very lackluster. But yeah, they go up there and, oh yeah, then they come down and I think it was like $28 million for that. Who's wasting money like that? Nobody ain't wasting no money on that shit like that. Tom Hanks said it. He said they invited him to do it. He's like, I'm pretty good, but man, I ain't about to be spending no $28 million. You know what I'm saying? For that experience, hell no. Bro, you want to get on a roller coaster, then pay $60, go to your local place, you know, save yourself some dollars. You feel me? But Elon Musk is a funny dude because he be beefing with like people on Twitter, you know what I'm saying? Not just regular people, but like CEOs of companies and stuff like that. And like, he's very arrogant. And I'm like, if you play poker, you got to read your players. Like somebody knows something that you might not know. When they coming off like that, you got to read them. You feel me? So I'm like, yep, Elon, he knows something. He out there beefing with Northrop Grumman and Raytheon and them on Twitter. But he always knows something. But anyway, he's talking about selling 10% of his Tesla shares. And from my understanding, the vote, people said, yeah. And so now he got to sell 10% of his Tesla shares. So it'll be interesting to see how this is going to play out here, Terry. Because I know Terry like scalping off of Tesla. You play Tesla like every week. Tesla used to be the short. 2 years ago, Tesla was the stock that you shorted. I had my biggest year shorting Tesla, and I learned quick to stop shorting Tesla because it turned into a religious stock. You know, people are religiously believing in it, and so it's real interesting. In fact, there's an analyst who actually is saying, let me see, I think I posted, here we go. There's an analyst that posted, here's the report, you guys can check it out. He said Tesla stock is overvalued by $1 trillion. Analyst says, a look at the numbers. Now, what was crazy is that the analyst said it, because, you know, when you're doing analysis, they have a bear case, they have a consensus case, and they got a bullish case. Well, it's interesting that the bear case scenario, he said he think the Tesla stock can drop all the way to $150. Now, I don't know what the hell this analyst is seeing, but that is really interesting. I haven't had time to really take a look at his reports like that. But I was like, $150 a Tesla? That's crazy. Which I think is highly unlikely, but it's still interesting because that's an analyst report there. So you guys check that out. What else we got? Oh yeah, the infrastructure. So we're talking about the whole infrastructure situation that just got passed. Yeah, let's see here. Did I post it up here? I think I posted it on here. Let's see. Biden to sign. There we go. Biden to sign infrastructure bill soon. So what happened is that the House of Representatives, they passed a $1.2 trillion infrastructure bill. I know a lot of Republicans is not happy about this. They probably about to go and assassinate a couple people over this because they're like, who are those Republicans that allowed this to pass, right? Anyhow, the 1.2 trillion pass. It's going to go to Biden's office. He's going to sign it. And then, you know, they're basically going to spend this money. Now, understand the government don't make money. So who's going to be really paying for it? You feel me? We are. At the end of the day, people got to pay for it. So they're not going to try to tax to get this thing done. They're going to have the feds to print the money up. And you're talking about inflation is high now. This is why inflation is going to continue to do what it do. The government think that they can spend money to generate the productivity situation, right? They think that it's going to help productivity if they can figure out a scheme to create some jobs, right? Oh, we need to pave some roads and fix the airports, and this would be a benefit to society, and this would put people to work. And that's the whole idea on this situation, which I don't think that is actually going to generate the outcome that they actually anticipate. I think we'll see more inflation, actually. And what you got to understand is that when the government jumps in the game, it is not without consequence. See, this is one thing that's why when you understand economics, you start to understand this stuff a whole lot better. That's why I kind of try to give you guys a little bit of the game. The government can't jump in the game without a consequence. They're supposed to be like a referee. You imagine a referee jump in the game and shoots a basket for the Lakers in the game, right? That he's giving an advantage to one team. That puts the other team at a disadvantage. You feel me? So in this situation, it puts private, entrepreneurs at a disadvantage when the government comes in, do all the spending, because in the market, we're competing for the same stuff. So you imagine these companies that normally do this kind of work, private entities that's hiring people, they come to the market like how we come to the market. I mean, we're trading, but at the same time, they got to come to the market to buy the commodities. You need lumber, you need copper, you need steel, all these things. And when the government come in, you got to understand, they got like a blank check. You feel me? They come in and they're like, yeah, give me boom, 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 boom. I'll spend whatever. You feel me? And when they do that, they cause the prices of things to go up. This causes, unnecessary capital spending for the private investor. This is capital that he could have spent reinvesting to pay higher wages or research and developing his company, stuff like that. So even at the end of the day, the government itself, when they intervene into this type of stuff, most people don't understand that it has a negative consequence in the free markets. And so you got to have the free markets to do what it does. So all of these are schemes that have been done before. It's nothing new. You got to go back and do your history. But there are a couple of things that are different. See, on this time here, you got 0% interest rates. Interest rates are super low. It's just ridiculous. And so all of this stuff has an impact. That's all I want you to understand is that understand they can't put something in the game. They can't just give everybody a reparations check or whatever the case you want to be without a consequence. You got to understand the benefits, cost benefit analysis, right? And so if the consequence is going to outweigh the benefits, then the government should not have done it in the first place. But that's what you're basically seeing with this infrastructure situation. But for now, they'll claim a victory and they'll try to get started on this right away. So Biden's Build Back Better plan can get, jump started, and perhaps he can salvage, his record, perhaps, but I highly doubt it. All right. So what else we got? Boom. Let's take a look at what's coming down the pipeline this week. Preview of the week to come. All right. And then we'll take a look at the earnings situation here. Monday, nothing really on the calendar. Got a couple of earnings stocks that's going to be here. Tuesday, we got the BLS. They're going to drop the PPI numbers. So we get the PPI data. And then we have the National Federation of Independent Business releases its Small Business Optimism Index for October. Who cares? Wednesday, we'll get the electric truck maker Rivian. Okay, so another electric vehicle company in the game. It's going to be trading under ticker RIVN. So we'll be watching that, which Amazon is backing them, by the way. So pretty sure they're going to be popping. The BLS releases the CPI number for October. Consensus estimate is for a 6% year over year gain compared with the 5.4% jump in September. So they're actually anticipating inflation to go up even higher to 6%. And remember, the Fed's mandate is 2%. We're way above this whole 2% target, which is crazy. All right. And then let's see. Thursday, you have the Veterans Day. So U.S. fixed income markets are closed in observance of Veterans Day. So that's the bond market. They're going to be closed. Friday, I haven't seen anything about the equities markets. So I imagine they're going to be open. So there's some trades that we can make. Friday is going to be the University of Michigan releases its Consumer Sentiment Index for October. And the estimate is for 72.5 reading, slightly higher than September's. So they believe that consumers are optimistic, more optimistic going into the holiday season. We'll see. The BLS releases the JOLT numbers. Economists forecast 10 million job openings on the last business day of September, about 400,000 fewer than in August. So they're expecting 400,000 fewer jobs created than back in August. But it's still historically elevated level. Okay. But again, that's all signs that, economy's slowing down. Dustin says that AMD's having a huge event on Monday. You watching with all of the Metaverse attention lately? Metaverse. Interesting. So yeah, I don't know if you guys saw Mark Zuckerberg's presentation on the Metaverse. Any of y'all see his presentation on Metaverse? That was interesting. I watched a good 10 minutes of it. We talked about it last week, but I know when y'all hear me, when y'all hear me talking about technology, it may seem as if, I don't like technology, but make no mistake, I always get the latest technology stuff. I experiment with all kind of technology stuff. I got the first 5G phone, you feel me? And 5G ain't shit. It's ridiculous. They lied to us. Right? 5G is just terrible. They need to go back to 4G. 4G worked with no issues. Bring back the 4G, you feel me? It's still here, but I'm just saying, we're just wasting a lot of money because technology always overhyped. Understand what I'm telling you. It always overhype and under-deliver. You feel me? Even on my phone, when I got my phone, right? This phone has the augmented reality on it. I can scan anything, put it on my phone and holographic type stuff, but nobody was using it. So they don't even put them in phones anymore. This is crazy. Technology always overhypes and underdelivers. I remember having the Xbox Connect. When the Xbox Connect came out, I thought it was some dope technology. And it actually was. I used to do my workouts. I used to do my insanity workouts on it and stuff. But the market did not like it. So they ended up taking it back. So now we're just playing regular games. We had more advanced technology, but the people didn't want it. It was like, gimmicky. The games were terrible. It's like, it sounds like something that you want until you get it. You know what I'm talking about? Like, it sounds like something you want, but when you get it, you realize you don't even use it no more. You don't need it. It's kind of like that. Like when you realize, I got to move my body. Oh, it's doing too much. I don't want to do that. Let me just sit down and play a regular game. That's what I wanted to do. But the whole metaverse situation, like Mark was telling you in the whole thing that, he was saying that we're not even close to any of this even being possible. He said what they're showing you is what this all could possibly look like in the future. He's thinking 5 to 10 years from now. But again, of course, you have a lot of people with business interests that, they want to go ahead and hype up their products and stuff like that, their beliefs in this thing. But I just can't see people like my grandmother putting on one of these headphones and really having a good time. I mean, maybe your grandmother would do so, but I guarantee you my grandmother will not do it. I guarantee you that my mother will not do it. And I think my mother, she's in here tonight, I think. Yeah, my mom, she's in here. She's watching, guys. Well, I'm telling you right now, she's not going to do it. So they got we got the Oculus headset and all that machine into all that. Well, put that just down. It's basically like, imagine living in a video game world and they want you to I want to live in a video game world. You don't want to live in a video game world. You need real interaction with people and stuff like that. It doesn't mean that people are not going to use it. But what I'm saying is that it's overhyped and that by the time it releases, you really see what it's going to be about, the price of it. And then once people get tired of it, we'll go to something else more meaningful in life, something more productive at the same time. All right, so let's go over to the earnings, which I believe ToPZ posted in here. All right, here we go. Her birthday week. Happy birthday, Topaz. I don't think she's here tonight. She's probably eating Chilean sea bass. Y'all know how we do. All right, so starting off on Monday, we got the Trade Desk, PayPal, AMC, Roblox. Roblox is going to be popping. U.S. Foods, Lemonade. Okay, so yeah, that's pretty much the ones that I'll be paying attention to. Tuesday, you had Palantir, Neo, Coinbase, Upstart. I think that's your stock right there, Chris. I think Chris was killing that. Workhorse, Fubo TV, Cisco, DoorDash, Power Plug. That's Plug right there. Ocugen. So, okay, some good names on Tuesday is going to be playing. Wednesday, we got Wendy's, we got Disney, SoFi, Wish, Affirm, Open Door, Beyond Meat, Root, Energizer, let's see, Mastercraft. Okay, Open Door. When we watching for Open Door, you guys know about the whole situation with Zillow. They really messed up big time. You feel me? And so I want to see how this is going to play out with Open Door, and it's another company as well that's going to be reporting this week, also in that whole home flipping business. So definitely going to be seeing what developments come from that, because they messed up big time, and I want to see if they're going to mess up, or whoever else is messing up buying these homes at these crazy prices, which is ridiculous. Thursday, don't know none of these names really, but Yeti's a good one. Yeah, that's about it. That's all I'm looking at. Friday, AstraZeneca. Okay, that's going to be light. So really, the bulk of the week is going to be concentrated in Monday, Tuesday, Wednesday. Thursday and Friday is going to be more lighter. Blink. Okay, so you like Blink. Yeah, y'all going to have to put me on that because I don't rock with that. I'm not even paying attention to it, but y'all keep me posted on that. But those are going to be the main ones that I'll be looking at. Moving over to the stocks here. I told you guys we had a couple of concerns, but I want to take a look at the broader markets first. Started with the ES. All right, so take a look at this chart right here. All right, this is the S&P 500. And what do you notice on this chart is that when we actually take our swing high to low, we get projections up here. We got this first extension 127.2, and we see that the market cleared that. Okay, that was a profit taking zone. But guess what? We were out of bounds right there. And then we continued to melt up even further to the 161.8 extension. So this is actually top, super top. You got to understand, we hit this high, we came up to this high, we bounced down, we retraced back 100%, then we passed it, we breached that, okay? Now we're going even past that, we're going to the 1618 and taking a look over here, the stochastics, the RSI, everything is actually overbought, okay? Do you want to be a buyer at these highs? No, I don't want to be a buyer at these highs. And we see how it clearly tapped, almost tapped this 1618. It's close enough for me. But I think it's time for a pullback. Doesn't mean that it's going to happen, because when you're in a bubble economy, it can continue to melt up a little bit. But I don't know who is going to be buying at these highs. This is a good profit taking zone. So I imagine that we will get some kind of pullback. We'll see. But we got sell triggers that's right here in the overbought territory. So normally you got that overbought territory and you got a sell trigger that's, Q to short. Okay. And this is pretty much across the markets. Okay. I'll look at the same thing with the NASDAQ. We can see the same thing here. The chart looks, pretty much the same. Bingo, extended all the way up here. And it's already starting to peel back some. We can see, momentum is starting to die down a little bit here with the dark blue color. And we got that sell trigger up there. Again, your target was right here. That was your cue to sell off. So again, I'm anticipating pullbacks. Doesn't mean it's what's going to happen, but that's what I'm anticipating. The rut. Yeah, we talked about this situation with the rut, the whole time I was telling y'all for weeks that this thing was squeezing and it needed to fire off. It was going sideways. Just taking a look at the weekly chart here, we saw that it just skeeted. I saw the squeeze in there. Like, it's got to make a decision. Bingo, got that buy trigger right there. Boom, and it hit the target exactly, the 127.2 extension. Doesn't mean that it can't continue to go up to the 1618, but it is, even on the weekly chart, it's overbought, okay? Squeeze is just firing off though, so you should have a little more runway in there, but the Russell acts a little eerie. It kind of likes to move sideways, and so for that reason, I wouldn't be surprised if it starts to move sideways up here against resistance, okay? But yeah, again, it's clearly overbought again. So that is the Russell. And same thing for let's take a look at the Dow. Yeah, the Dow did the same thing, came up to that 127 extension right here. And then it blew through it a little bit, right? Boom, popped up through. Understand it's in an overbought territory, okay? Extension is right up here. Got two extensions right above, but it's right here at this extension and it's overbought. So to me, that smells like the bears should be able to come in and eat at these levels. All right. Wanted to take a look at bonds. I didn't pull up my yields chart here, but let's take a look at bonds because I find this interesting here. Just looking at the TLT here, and you can see the flag right there, right? So bonds came down here like this, bingo, look like a little double bottoms kind of situation, but then you got the flag right there, right? And then boom, it's popping up, okay? So that's interesting because you got to understand bonds normally play inverse to stocks. Bonds is a safe haven, right? It's supposed to be the safe haven, even though you're not getting no yields right now, but typically, when the big money is flowing, the institutional money is flowing, they like to have a mixture of stocks and bonds, okay? And so when the situation is getting a little too risky, some of that money comes out of the stock side and it goes into the bond side. And so I don't know who's buying, but we can see the bonds got a nice jump on Friday there. So, and that was a bullish, bullish setup, which I saw ahead of the move, which is interesting, because it actually popped above. So we'll have to see how that's going to continue to go. But again, that furthers the narrative to me with stocks pulling back if bonds continue to go up. Now, keep in mind, as bond prices go up, bond yields, the yields go down. They play inverse. And so this is actually good for the housing market, with the bonds going up, interest rates going down. And that's supposed to, again, incentivize and entice people to be able to buy. But you remember those home prices are so high, it's ridiculous. So maybe you'll start seeing home prices go down a little bit. Either way, that lower interest rate is supposed to try to keep that thing bubbling, keep that bubble situation bubbling. So anyway, that's bonds, and then the dollar. And so then you had the dollar also, back to a 100% retracement as well. And it has a squeeze on it, which is interesting on a daily. We do have the squeeze on there. So this is really going to be interesting. Normally, again, stock market plays inverse to the dollar. If the dollar's strong, then equities are weak. And so from here up to here, we do have, some extensions up here, right here. That's the first one. And then got the second one right here. We got a squeeze that's on here. We got some positive trends that's in here. It is up against this 100 retracement here. It didn't quite clear it. So not making it too fast of a move because the price needs to clear this level here. And it looks like it choked up right there. So we have to see. Did get the buy trigger right here. And that squeeze is bullish. So it'll be interesting to see how this plays out. But again, if this goes north, then this should be bad for equities. Okay. And then also we also saw gold here as well. Just pull back on gold a little bit for you guys to see the shape out right here in this channel. It is a downward channel here. It's going just like this. And then this level that I had here also is resistance. So you have two strong resistance points is right here. Key question is, can gold clear this zone? I think that it can, but doesn't mean that it will. Friday had a nice jump up. You see that? Boom. See, again, it was struggling up against this 200 moving average. This 200 moving average kills it every time. Kill it. Now it's finally getting above it. So the question is, does it hold above and that 200 becomes its floor? I think that's probably going to be a more appropriate way to look at this versus like a outright breakout. And so that's interesting because a gold should have been broke out, if you ask me, but it hasn't. It's been playing games. But the real gold buyers out there, they're not selling, okay? Real gold buyers, they know what time it is. They're holding. So, and if you check the physical gold, you'll see what I'm talking about. But, the paper gold, you got the speculators in there, the traders and stuff. So it do what it do. But either way, this zone that it's at right now, I definitely want to see if it's going to clear it, which, again, that'll be interesting if it does, because it is up against the key resistance. So we'll have to see how that plays out. Silver's going to follow gold as well. So I think those are good. Let's see Bitcoin real quick. All right. Now, Bitcoin actually looks better on a daily chart. This is a bullish setup. It's got a squeeze on it as well. So it looks like Bitcoin could be out on another breakout move higher up into, we got the $7,000 zone here as the first target. Next target will be around 7,500. With this type of squeeze pattern setup, we see how the stochastics went down. Now it's bouncing up. We got a little buy trigger right here. This could definitely be a move for Bitcoin, for crypto. So overall, bullish outlook on Bitcoin. Chart looks pretty good. We'll see how it plays out though, but chart actually looks good. All right. With that being said, man, what stocks you guys are taking a look at? What y'all got on the radar? We had some good plays last week, man. What's funny is that the Airbnb joint, did y'all getting that pop off? This setup right here was crazy. I think Terry was in there. Yeah, Terry and Chris was in there at the, and Jonathan, before the bell. I was like, yo, Terry, here we go, Airbnb. And You know, the call options was like, I think $3 at the time, and man, it joint went all the way over $12. You know, in like a few hours. It was just ridiculous. So anyway, you saw that crazy play. This was a squeeze. So the setup was clear for me. And then the momentum was in there, headed the bell, made sense. You had the earnings situation that was positive, popped up. It actually went higher than what I thought it was going to do. But, you know, I got to take my bag quick. You feel me? All right. So Chris says he wants to take a look at Caterpillar. I guess you guys are trying to play the Biden infrastructure stocks. That's what it sounds like, because of the Biden infrastructure plan. I didn't see no real plays on the infrastructure stocks, though, to be honest with you. None of them look good to me as far as, you know, typically what we're looking at with trade setups. The news itself is good, but I don't see any trade setups that actually appeals to me. But if you guys know some, bring them through. Y'all know the setups. But on Caterpillar itself, yeah, I mean, we take a look at it from this high all the way to this low. I can see investors saying, hey, this is at a discount. It was at 247, and then it dropped down to about 190, right? And so it did a counter trend situation. It's up against this key resistance, which is the 100 moving average. So it bounced up in here, boom, boom. And it's struggling right up here against the 100 moving average. Key thing is, you know, if it can clear this 100. You know, if it can clear the 100, then it can get up to the 200 moving average, about $215, if it can break out from this, you know, strong level of resistance. I don't know if it will or not. So again, this is a counter trend situation. So counter trend setups don't really make it most of the time, but you'll be able to see falling wedge on the weekly broke out. Okay. Yeah. So on the weekly chart, yeah, it's starting to break out. This is the 21 moving average. It still hasn't cleared it yet. So again, that's still at that level that I'm talking about. Basically, it needs to clear this. It needs to clear this level right here. So you have a case, all right? Boom. You have a case. It's up here. All right. We see the momentum shifting back upwards, shifting upwards. Things are shifting upwards, but it's up against that key resistance. So I would actually wait till it cleared that resistance. If it clears the resistance, then yeah, you have an upward move. I would say at least into the 618 retracement as a key area of resistance to the upside. Still a counter trend situation though. That's about 200, and you could just round up to 225. What else? Yeah, Netflixer. Trying to Netflix and chill. Woo. Woosa. I had a year woosa when I saw that chart, like, damn, what happened here? Okay. So it looks like it did get tapped out. Let me just see something real quick. Which one I want to do? All right, I just want to put this on there and see what it did. Yep, that's exactly what it did. It hit the 2618 retracement. So from here, it rallied up super hard, and then it hit that 26. You guys probably can't see it, but it's the 2618 retracement there. Oh, it's extension, excuse me. So this extension it hit, and then it got rejected, and now it's bleeding through. You know, this moving average right here, which is the 21. And so it's falling. So I don't know what your plans on doing with that one, but you know, shorting it looks like that's the move right there. Yeah, it is definitely breaking. So you want to see if it's going to hold this. I don't know if it's going to hold it or not, but that'd be something to pay attention to. But again, this doesn't look good. It's breaking. What else we got? FedExer. All right. FedEx. Okay. Another counter trend situation. Again, you're taking a look at the highs. Do I want to be a buy at the highs? No. Do I want to be a buy at the lows? Yeah. So, I mean, again, that's a situation where you're getting a good stock that's pretty cheap in comparison to its most recent highs. And now it's counter trending, moving upwards through the moving averages, went through the 20, went through the 21, bounced up against the 50, got rejected, came back down to the mean. Now it's traded slightly above the 50, but it's looking kind of weak on the stochastics right here. The stochastics is looking a little weak at the C. But again, your target would be the 100 moving average resistance if you're looking for this to move upward some more. But it is a counter trend trade, so the probability is lower on these type of situations playing out. Typically, we want to follow the trend. All right, and Ron said he's liking the metals. And what else? Okay. Alcoa. Yeah, this is one of those situations too where it's an interesting situation. Don't have a buy trigger on this yet. But what you do have is that it's overbought and it's starting to trend up. The momentum hasn't shifted yet, but if it does get a shift in the momentum, then I would, I'll probably look at this to come back up some. So, but right now, and it's still in the bearish territory. I did get one little buy trigger right here, but I don't know if that's enough. So that's going to be interesting to see how it plays out. Really, you want to see that price come above the 8 moving average. Hasn't done that yet, but it doesn't mean it won't do it this week. CMC, commercial metals. Yeah, so again, with the gold situation, silver situation is looking pretty interesting. The situations look bullish to me, but it's up against some key resistance. So my confidence isn't all the way there on those yet, but I do see a situation that could play out on the metals. But the metals have been really, really shaky. And, crypto has really been taking some of its thunder, if you will. So we'll have to see how it plays out. Again, this chart, looks pretty good. It looks a little bullish, but up against its resistance. Want to see how it's going to play out. We need to get this thing to come above that resistance zone. I mean, you could take a look at some of the other ones too, like, some of the gold stocks, like gold, GLD and all of that. Let me see. Yeah, like here's gold right here. Again, it's, counter trend. You got that 100 moving average that's up there, but it is moving towards it. So maybe you're looking at a counter trend situation. You got a squeeze in there. You got the stochastics running up, the trend running up, a buy trigger up. I think it's likely that we can get to at least the 100 moving average, possibly even blow through it. But that's on gold. So I don't know if the gold stocks, the gold investors are waking up. I did see an article that dropped on gold stocks on the Barron's this week. So maybe they're trying to get some money to go back into gold. I don't really know, but or these gold stocks, these metals. But I mean, it makes sense, to do so, Yeah, here you go. Another one right here, GLD, which is actually now trading. You saw it, slid all the way down here, but then it popped all the way up above this key resistance zone, which that's a good sign. It is in a squeeze here as well. So you may want to consider GLD as well, because again, this looks better than the rest with, with that upside potential being greater. So keep that in mind for the metal traders out there. Who else we got? Starbuckser. All right, same thing on Starbucks situation. They had ripped down, and the dip buyers came in and buying it up. Caught a buy trigger right here on Friday. Nice push upwards, going back up past this old target. This is an old target I got on here from Argus, an old target. But I like to keep some of those targets in there. Price is right there. You got a squeeze on here. You got that. You got that overbought condition that's starting to trend, that's starting to go back up, which is a bullish case there. The trend is starting to move up as well. I actually like this to the upside. So this is something I'm definitely going to be looking at. Excuse me. I'm definitely going to be looking at this on Monday, see how it plays out. Once the markets get a whiff of it, it could definitely have some nice plays in there. And Starbucks is one of those companies that can pretty much pass their cost on to their customers and stuff like that. They talk about, some of these companies and their earnings. That's what we're listening for. Like, who can pass these costs on and stuff like that. Starbucks got religious cults. You know what I'm saying? Like when people drink Starbucks coffee, bro, they don't drink nothing else. You feel me? So I think they're going to be good. What else? Dustin with 10. All right, the Invesco Exchange Traded Fund. This is the solar ETF, and I imagine this is one of those Biden infrastructure type situations. Let's pull it back some. I'll go to the, it's been a while since I had this one here. All right. So here we go. On a weekly chart, I'll just do it like this. Oh, it's got an extended squeeze on it. Hate extended squeezes, but a good amount of time at this floor lets us know that this is a key floor area here. What's interesting on the RSI, you can see like back here, I got the sell trigger. It's interesting. I got a sell trigger on here, and because it kind of slightly tilted to the overbought territory. And what I see that's right above this is this 618 key resistance level, which again, that just plays right along with this RSI down here. It's got an extended squeeze on here. So I'm not too sure if this is really going to have this breakout. So what I'm looking at here would be that key resistance at the 618, which is pretty much about at $100, a little above $100 right there. And I have to see if this is really going to play out. I think I got off in, was it FSLR last week? I can't even remember. I think, man, we just be trading, bro. Like, I don't even remember some of the names, but I think it was FSLR that I got off in. That was interesting. Solar stocks. Yeah. Got off in here for a solar stock and killed it in this one. This was a good one. This is a good trade, actually. But again, the trend is higher. It's going higher. Maybe it'll continue to drift higher. But right now, I wouldn't buy it this high. And the tan stock looked like is again at that 618. So that's what I'm saying. Like when you look at these Biden infrastructure stocks, they just don't I got a whole list like that I did, when he became president, actually. So these infrastructure stocks over here, they just don't look good to me. They don't have no good setups, man. I mean, I know what the story is, but the setups are not there. I mean, you got John Deere, and from my understanding, like they're having a crazy strike right now with their employees are striking, and they offered them, I guess supposed to have been their best package, but the employees are not feeling it, so that's not going to go through. And look how volatile it is. Even my IV percentage is all red up here. So, yeah, these stocks, I just don't. They just really don't look good to me. I don't see no setups is what I say when I don't see nothing that looks good. I don't have no setups on them. You see me? So maybe maybe it was already priced in, and that's what normally the markets does anyway. They price stuff in to get ahead of these moves anyway. And then by the time the news come out, the play is already over. The retailers are left holding the bag. But I like to look trader stocks that's got clear setups. If the setup is clear, I'm gonna make the trade. The setup is not clear, then you got to think about if you're gonna make the trade. If you got to do all that thinking, then don't take the trade. That's just how I feel about it. So, what else we got? Just wait and see. I think I missed a couple of y'all stuff in here. Yeah, there we go. Think about nibbling on some CGC. Okay, tank hard on earnings. Sweet stock, right? The bottom with the volume climax. Definitely long hold and not a trade setup. Yeah, CGC. That's one of the what's that? Canopy growth. How do we start doing anyway? Oh yeah, they've been doing terrible. Yeah, nah, there's nothing that I would touch. I mean, you got this squeeze in here that's firing short. And yeah, I mean, this is definitely not looking good. I don't know what's going on the weed front. Maybe they don't have enough land out there to grow the crops. Because, Bill Gates, he buying up all the land. You feel me? He buying up all the land. They don't have enough land. I don't know. Y'all keep up with that story. Y'all let me know. All right. Yep. Okay, good. Did I miss anybody? Anybody else got anything else that you're looking at? Oh, you know what? What might be interesting is GE. Here's a stock, GE, that may be interesting coming into this week. It reminded me of the setup that we had on the Russell, where it was this crazy long extension and it really didn't do anything. And, that's the crazy squeeze. It's just trading sideways this whole time. But it's at that point where it has to make a decision. Same thing I told y'all on the Russell situation. But we can see it starting to leap up now. And, yeah, I think we can squeeze some points off of here, at least to the 786 at least. But that's a good target right here, about $120 at the 127.2 extension. So this one may be a good one as well. I'll definitely keep my eyes out on this one, GE, because I think they may benefit as well. Let's see what else we got. MNST, Monster Beverage. Oh, yeah. So Monster Beverage, I think I'm just looking at this chart. It looks like the play already played out, if you ask me. Definitely, came down to this bottom because of earnings, popped up right to its resistance level, which is the 200 moving average. And because it popped up so hard, you typically will see these stocks will trade a little sideways to start forming like a pennant or flag or so. That's the way you typically see these kind of play out. They'll kind of start to do something where they'll form some type of pennant right up against that strong resistance level. Again, it's one of those counter trend situations. It's traded under its key moving average. So we'll see. Yeah. Oh, you say you was wondering if there's any more meat on the bone? It could be, but because of that key resistance level, I would imagine it'll trade sideways up here. Like if you're doing options, you can put like a butterfly, something like that on there, capture some of that action, or maybe even the iron condor. Okay, so you already took the profit. Yeah, you over there scalping. Crispy over there. Yeah, he over there scalping all the meat off the bones. I'm in and I'm done with them, so I trade them in. I don't love them. I don't cuff them. I don't love them. You already know. I don't love them. I don't cuff them. You feel me? I don't even remember names. Got to get it, man. What else we got? All right. Booking. Okay, this looks good. It's been a while. Let me clear these charts up a little bit. Well, I'll just leave it in here. Well, let me take this swing high down to this low. Okay. No, that's not low enough. How low can you go? How low can you go? All right. So yeah, there you go. You got the squeeze in there. That looks great. Trend looking good. Stochastics is shifting upwards. You can see we caught a little buy trigger in here. Remember that the swing is here to here. So this level here is the 127 extension here. So there should be some profit taking coming off right up here, but I think that this may be able to squeeze out all the way up to even the 161, 1618, 2800 target. So yeah, this is a good bullish one here. I'm interested to see how it plays out. Again, it is up against that extension, but the squeeze is indicating that this thing got some room in the tank here to push, beyond that. So that looks good. What else we got? That's it. Yeah, that's it. We're at an hour. We're at an hour now, guys. We're at an hour now. We got to try to keep these things a little short, but definitely appreciate that. One thing I think I'll cover here, and then we'll just bring it to a close. Make sure y'all check out everything on the website, of course. Tell a friend to tell a friend. I did want to cover some of the highlights from the earnings from some of the CEOs and CFOs, things that they were actually saying. We like to capture what they are seeing in the market here. And so starting at Fastenal, one thing that they said here is that product and shipping cost inflation is not just high, it's brutally high. The chaos and the impact, not just from a financial perspective, but from a toll it takes on our human capital, is immense. So they're calling like, hey, this inflation is out of hand. Chipotle, we believe that we got pricing power really better than almost anybody, so we'll be very patient. So again, they can pass their costs on to their customers. And then GE, we just saw them on a chart there. They said that we are experiencing inflation pressure, which we expect to be limited for the balance of 2021. Next year, we anticipate a more challenging inflation environment. So they expect inflation to be worse next year. This is GE. Sherwin-Williams, we are aggressively combating raw material inflation. We implemented multiple price increases in the quarter. We will continue to do so as necessary. Not good. General Motors, we do have that commodity inflation, but we still remain convinced about our ability to be able to offset that through productivity or some of the pricing actions. So they're not denying inflation, but they're trying to be optimistic. CEOs, CFOs, they always got to be optimistic for some odd reason. We think the primary cause of supply chain related shortages will be the chip shortage. it is affecting pretty much most of our products currently. This is Apple, Tim Cook. So again, that just furthers the inflation narrative straight from the earnings reports. You guys understand what I told you before. Stock up, get all the things that you need, because this is not going away quickly. And to protect yourself from those inflation pressures, you buy those things that you're going to need in the future at today's prices. That's how you protect yourself. All right. So let's keep that in mind. With that being said, man, I'll catch you guys in the chat room on the website tomorrow, the rest of the week. Until then, you guys have a great weekend. Peace.